In this video, we're going to look at dealing with the losing streak, something that we'll all suffer from time to time as traders, and give you a practical 5-step survival plan to help you through it and to come out the other side a stronger and better trader. Let's just start by looking at 2 key facts. First fact is every trader, even the best trader, hits a rough patch. What separates professional traders from those who blow up accounts is what you do next. The reality is that every trader needs real-world tactics to protect capital. Steady the ship in terms of your psychology and, of course, restore disciplined trading when the market hits you hard. There is no doubt that there is damage that is associated with losing streaks in terms of the psychology of a trader. Losses can undermine trust in your strategy and your decision making in the heat of the market. And even if you've got a history of having a solid trading edge, this can somewhat feel worthless when you get a consecutive loss series of maybe 5 trades back to back. What you need to do is move through that and come out the other side with some restored confidence in both your system and your decisions. The reality is that the emotional pain can outweigh the financial loss in terms of ongoing consequences. The hit to your confidence can linger much, much longer after you've recovered the profit loss that you sustained in a losing streak. And of course, if you have subsequently some fear and frustration in terms of your trading and how well you're doing, this can breed hesitation or even reckless revenge trading. We see this often. And without a clear action plan to work through this, a streak can compound itself through poor choices on an ongoing basis. A losing streak just doesn't drain your account. It can erode your belief in you and also in the robustness of your strategy. So let's start with the 5 steps. The first one is to accept and assess. What we need to do is we need to remove ourselves from the situation for a few moments. Okay, we need to pause, we need to breathe, and we need to avoid emotional knee-jerk trades, which are commonplace. If we start to react impulsively, the chances are, in our already depleted confidence state, that it almost guarantees more mistakes. We need to look back at a series of trades, maybe 20 to 30 trades for patterns. You need data at this stage. You need some hard evidence, not feelings, to start to return to successful trading. And through doing this, you can start to identify that that series of consecutive losses is just normal statistical drawdown, a change in market regime overall, or errors in your execution. Before we start to act and knowing what we need to work on, we need to pinpoint the real issue before changing our approach. You need to treat a drawdown event as the opportunity to do a trading audit, not a crisis. In times like this, you need clarity in terms of what to work on next, and that beats panic every single time. Your second step is to cut your risk. We need to baby step our way back into the market until our confidence stabilizes. So one tactic is to potentially reduce your position size by half, maybe even more, as the smaller positions will often soften the emotional load of getting back on the trading saddle. If we accept that smaller trades means smaller swings, what this does automatically is create a more controlled environment where we've taken much of the risk away and we can start to rebuild discipline and see results that are positive happen again. And what this also does, as you're, if you like, engaging in some short-term rehabilitation of your trading, is protect your capital so you can continue to trade with a clear head. Remember, capital protection is the number one aim. Preservation is always first and then profit second. So during periods of doubt, scale down. If you control that risk, it restores psychological control. And control together with confidence are the 2 key drivers to being able to execute a plan as you would like to. Step 3, we've called simplify everything. What we mean by this is focus solely on your highest probability setups. The trades that historically have delivered well for you Cut out the fancy extras and return to your bread and butter playbook that over time has demonstrated positive outcomes. Look back again at the trades that you've taken previously. Divide them up into strategy types and see which one is working to you. That's where to start again. Perhaps look closely at the strategies that you're using. Maybe eliminate indicators that you're not using or conflicting signals that may be on a chart that may be stopping you taking action, either on entry or exit. Often the best plans are the simplest because in the heat of the market, to trade something simple is far, far easier to trade something that's complex. So look at the systems that you have and refine them accordingly to take away some of that complexity and make decision making easier in the market. Another tactic is to limit the number of markets watched. The temptation is always, particularly with a platform like MT5, where you have an opportunity to trade hundreds of potential instruments, is to focus perhaps on 10 to 12 that you learn well, that you feel slightly more confident in terms of understanding what moves price. And what this does is it takes out some of the noise of moving from chart to chart to chart. That deeper focus allows you to make great decisions. So these three simplifying tactics are really worth looking at in terms of your step back into the market. What you're doing really is trading only what you know works historically. And that simplicity will allow you to bring back that discipline faster. Step 4 is to rebuild with process wins. And what I mean by this is shift your focus from profit to perfect execution. You need to follow your trading plan religiously, step by step by step. Good trades are always defined by process if we're aiming for consistency. If you can accept that it is psychologically a win if you follow your system and taken a small loss, it's far, far better than strain from that and seeing larger losses on a consecutive basis. Use a simple trade checklist perhaps for each position with your entry signal, your risk size, and your stop level, and profit targets. Tick the boxes, no shortcuts. Do it. That minute or so it would take to say, have I got this in place? Tick. Have I got this in place? Tick. Is going to serve you well in terms of just making sure that you get back to where you should be in terms of execution. And of course, after the event, double check that you have actually followed each rule within your trading plan to the letter. Journal how closely you've stuck to your system as well as the profit loss. This may give clues as to situations that you may be tempted to move away from what you've planned, which ultimately rarely produces good results. You need to rebuild your trader's edge, and the best way to do that is to have precision in process, even if it takes a little time for you to start to see a series of wins on a regular basis again. And step 5 is allow yourself to move away, take a breather, step away for a couple of days if needed. Forced trading rarely works. Markets are always going to be there to take opportunities when they exist. And if you can approach the market on a day by day basis with a calm mind, then that's always going to be better in terms of decision making. So give yourself permission to move away. By doing this, you can also review recent trades out of the market environment, looking with a fine-tooth comb whether you're making repeated mistakes or forced entries. And as I said before, journaling can offer you not only some information about profit loss for particular strategies, but also a chance to self-reflect and be honest about what you're doing and what you're not doing in terms of moving towards the trader you could be. What this also enables you to do is return with that fresh focus and realistic expectations to continue to force trades again and seeing outcomes which aren't great has the potential to move you towards trading burnout. And in that state, then it becomes even more unlikely that you're going to recover from this series of losses that you've had. Sometimes doing nothing restores more profit potential than forcing another questionable trade is the bottom line. So there's 5 simple steps you can take. A little bit of work, but also giving yourself the permission to do what you need to do to get back to becoming that trader you know you are. So your actions from this video is consider the content that we've covered. How could this contribute to your trading? And of course, take some action. Plan for a series of losses now. Know what you're going to do if this occurs. And what this will enable you to do is be better prepared for next time. Trade safe and see you again soon. Bye bye for now.